Hello, this is Alexander Nikolov from trendrecognition.com. Today is October 23rd, and today I'm going to take a look at the Forex markets. Let's start with the Euro-Dollar daily chart. As you can see on the daily chart of Euro-Dollar, the trend is clearly on the upside. The recent pullback from the October top near 141.50 is just a pause, a temporary pause within this ongoing uptrend. I expect this retracement here to spend a few more weeks, and then the market to resume its uptrend toward 145.70 level. Going to the larger degree chart on the weekly chart, we can see a clearly ABC three-wave decline from the 2008 top. So it's highly likely that the euro has resumed its long-term uptrend against the US dollar. So I'm bullish here for this pair, but for the very short term, the next 2-3 weeks, it is likely to see some sideways consolidation with mild downside bias toward probably 135.20 toward this level. Let's go to British pound US dollar rate. Here, the trend on the daily chart is a weak uptrend. It's the trend is on the upside, but as the price is clearly above the rising 100-day and 200-day moving averages, but you can see that the up move is quite sloppy and choppy, and the price is currently below the 21-day moving average. So the trend is weak here. It's on the upside, but a weak one. The daily stochastics and daily RSI indicators are pointing down, so further weakness or some sideways trading is seen in the next few days. Eventually, here I will show you the our wave count. Our wave count here is that an ending diagonal pattern is tracing out from the May 2010 low. So probably we are going to see one more push higher later in late November, and probably that will be all here on this market. Then I expect the British pound to collapse in this market. How is that possible, considering the fact that the chart of euro dollar is bullish, and the chart of pound dollar, British pound against the US dollar, is currently bullish, but I expect a trend reversal in a month or so. How is that possible? Well, of course, the answer is here in Euro GBP market. Here you can see that the trend is higher, and it's clear to be seen on the weekly chart, where you can see that the uptrend in euro, the strong uptrend in euro in 2007, 2008 was followed by a choppy sideways trading with downside bias in 2009 and early 2010. But now, recently, this long-term uptrend of the European currency has resumed. So it's highly likely to see much further gains here, probably toward 1.00, toward parity between European currency and the British pound, single currency, and the British pound. So if that's really to happen, of course, that will explain the expected weakness in GBPUSD rate. Now let's take a look at the USD Japanese Yen rate. Here the trend on the daily chart is on the downside. The prices are clearly below the declining 100-day and 200-day moving averages, also below 21-day moving averages, which is also trending lower. The market is oversold, actually heavily oversold, but that doesn't matter. I really do not consider this a strong argument in favor of some kind of a bottoming process here. The trend is lower. The next level, the next Fibonacci level of potential support is far away near 78 level. So until proven otherwise, the trend is lower, and only a move above 82, 80, 83 area. This is the prior support here in September. Only a move above there will indicate that some type of a bottom is already in place. But again, until proven otherwise, the trend is lower, and one can expect further weakness of the US dollar. So all in all, the major markets, the majors, suggest lower dollar ahead, at least for the next few weeks. And in Euro USD market, actually, we expect continued weakness of the US dollar. And to back up, let's see the trend of the US dollar in some other markets. For example, Australian dollar against the US dollar. Again, you see the daily chart. The trend is a strong uptrend here. The price is firmly above rising 21, 100, and 200-day moving averages. The weekly chart is also quite positive, with this breakout here above 93.60 level. You see, until the prices return below that level, the trend is for higher prices. Also, if you take a look at the New Zealand dollar against the US dollar, again, this is the daily chart. The trend here is not that strong, but again, you see that it's in an uptrend. The prices are above the 100-day, 200-day moving average, currently around the 21-day moving average. Weekly chart here is again quite positive, though not a firm break on the upside yet, you see here. So it's critical to see a move above 76.25 level, but we have already seen a breakout above 73.50. So until proven otherwise, again, the trend is for higher prices in New Zealand dollar market against the US dollar. So my expectations are for further weakness of the US dollar. We may be close to a trend reversal in the US dollar Japanese yen market, and even more close to a trend reversal in British pound USD market. But overall, the American dollar, the US dollar, is likely to remain lower against most of the world currencies. So that's all for today. I hope you enjoyed this video, and I'll be talking to you later.